In addition to economic headlines, earnings season is also impacting the market. One area making a lot of noise is the music industry. Joining me now is David Schulhof. He's the founder and CEO of MUSQ. So great to have you on the show.
Thanks for having me.
Let's talk about your firm and the MUSQF ETF. It aims to invest in the most attractive segments of the global music industry. Walk me through what it is and what you're seeing.
Yeah, so we're the first pure play music ETF designed to capture all the growth and innovation in the global music industry across streaming, content and distribution, live music events and ticketing, equipment and technology, and satellite and radio. MUSQ really gives investors a front row seat to invest in companies like Spotify, Live Nation, Warner Music Group, Universal, and really exciting companies internationally like HIM in Taiwan, Tencent, Cloud Music, CTS, and Ventum. We have 38 companies in our fund today, and it's a really exciting time to invest in music.
Market had a big rout yesterday, but what did you see with your fund?
So not surprisingly, we were very resilient yesterday. Universal was flat. Tencent was slightly down. CTS Ventum was down 1%. Most of the top holdings in our fund were down just like anywhere from flat to 1% or 1.5%, because music is really not correlated to the rest of the stock market. Music is its very own unique, segment of the industry today. So we have all these companies in our fund, and we believe that music represents the most attractive segment of the entertainment industry. Music is undervalued. Music is underhyped. Music is undermonetized. If you listen to JP Morgan today, music is the best content story in the history of the media business. Music is cheap compared to what you pay for Hulu, HBO Go, Disney, so we believe that music represents a very compelling investment opportunity today.
What do you think are some of the biggest takeaways that we should have based on of what music companies are reporting in their quarterly figures?
Look, I think the big takeaways are that streaming is really driving a lot of this growth. If you look at Spotify, the company's been on a tear. It's up 80% for the year. It's up 150% for 1 year. 87% of all music consumption today in this country is dominated by streaming. Revenues are up 20%. And if you read the Goldman Sachs report, Music in the Air, the industry is doubling to 180 billion by 2030. There's 700 million paid streaming subscribers today. That number is going to 1.2 billion. Spotify just crushed it. They were up 12% paid streaming subscribers to 246 million. And so we're entering into a golden age with music. It's about the digitization of music. It's about streaming. And all the content companies are tied to all the streaming companies, not just Spotify, but Tencent, Apple, Amazon, Google. 70% of all these revenues for all these streaming services get paid to all the content companies. So if you look, it's not a surprise that, Universal reports revenues up 8%. All the companies are reporting anywhere from 8 to 20% revenue growth on the content side because it's all attributable to streaming.
Now we are seeing the price of some music streaming platforms, get hit by inflation. So based off what you're seeing, is the demand there to warrant it, or could price hikes wind up backfiring on these music companies, do you think?
There's absolutely no indication that the music industry would have any attrition to inflation. If you look at COVID, right? People were subscribing to 1 to 2 times their services. So there's no, music is cheap. Music at $10, music is undermonetized. Spotify raised rates twice in the last 2 quarters, and they crushed earnings both times. At $12 a month for 200 million songs, that is really cheap. You pay double that for Netflix, you pay double that for Disney, and you have to subscribe to several of those services to get all that content. So for 200 million songs, at $12 a month, that's a really good bargain. So there's no indication that even with inflation that people are going to cut off their subscription services for music. Music is really, really cheap. I think Spotify should charge, 2 times more than what they're paying right now, but that's just me.
As we're talking, we are seeing today's bell ringer, Kwesi Smith, the CEO of Greenwood Project, walking to sign the Distinguished Guest Book. We'll continue our conversation here as well. Taylor Swift's Eras Tour, it has been the biggest story in music since it kicked off in March 2023. But the tour takes a 2-month gap starting later this month, ultimately ending in December. How significant do you think the absence of the tour will be for the industry at large?
Look, Taylor is not the entire music industry. Even according to the Luminate report, she was, 5% of the 4 trillion streams in 2023. Look, live music is really happening. It's not just her. It's Morgan Wallen. It's Beyonce. It's all the amazing country acts. Look, Spotify Live Nation is an incredible company. That company reported earnings last week. Revenues were up 8%. Ticketmaster revenues were up 12%. We'll see what happens with the Department of Justice investigation. But look, they doubled their output of shows for 2024. So look, and if you look at companies like Sphere, which is also in our fund, that company's been on a tear. I don't know if you've been out to the venue in Las Vegas. It's incredible between the Eagles and Dead & Co. and U2. What an immersive, great way to see music, to see live music.
I want to get a question on AI. The three major recording labels, they've sued AI music platforms. I want you to break down what's happening here, how monumental the outcome here could be.
Look, here's what's happening, okay? AI, companies like Suno and Udio, those are the two companies you're referring to. These are AI technologies, and they are training their algorithms to copy Weeknd, Drake, Taylor Swift, and so that's why all the labels are up in arms. Okay, so that's number one. Number two, the second problem is there's no federal copyright protection in your voice, and that needs to change. So if you look, Marsha Blackburn actually just as early as last week introduced a bill before Congress, the No Fakes Act. It was nurture originals, foster artists, keeping entertainment. And there's also an No AI Piracy Act that was introduced in the House. And so these bills need to get passed, they need to get signed, because what's happening is there's a lot of benefit to AI. Producers can create new songs, but the companies are training their algorithms to copy the market of existing product. And so the labels are freaking out because of that.
All right, David Schulhof, it's so great talking with you about the music industry and your ETF. Pleasure.
Thanks so much.
All right.